And the decline of the rental market does not irk them that much because yes, they can't make as much of a profit they could have made last year, but they're still making a profit on the rental income even when the rents are down because they're buying with a huge sum of down payment. In today's video, if the rental market is down and rents are dropping, so are condominium prices, especially downtown Toronto, why then are investors rushing in? Today I'm going to explain. Hello everyone, this is Sam from SaberiSixRealEstate and Remax Realtron Realty Inc. As always, you can find my contact information in the description box. In terms of my Gmail, my Instagram, and my office, anything you need to get in touch with me with, feel free to get in touch with any questions or comment with your questions below. Furthermore, please feel free to subscribe, comment, and like this video. Your support, as always, is appreciated. I am a full-time practicing real estate agent. I do this on the side to inform the general public and obviously at the same time to market myself a bit as well. And yeah, if you do not want to subscribe, like, or comment, you're not obliged to do so. Feel free to dislike, feel free to unsubscribe and leave a negative but constructive feedback. Anyways, let's get to the point of today's video, which actually is influenced by questions someone asked underneath my other video. The question reads, can you make a video about why people are buying investment properties if rent is down? Is it all speculation? Is it renters becoming homeowners? Well, let me address this question. So let's establish the grounds here first, right? The rental market is down, rents are declining at a steady rate, which is scary because it's not a volatile rate where they plunged all of a sudden. They've been bleeding slowly, especially downtown Toronto, but all over the GTA since April, I would say. Furthermore, yes, condo prices, which I have discussed ad nauseum on this channel through different topics and different perspectives, overall condo prices are dropping as well. Just like the rental market, it is most pronounced in the city of Toronto and especially in the downtown core, whereas yes, the rest of the GTA is experiencing this as well. However, it's not as pronounced. Well, given that, why is it the case that people are still buying investment properties downtown? Well, the answer to this resides in who is buying these investment properties. And as the question hints at it, speculators, yes, that is part of the answer. However, renters all of a sudden becoming homeowners, no, that does not make up the majority of purchasers downtown. To understand the who and the why of the purchases downtown Toronto for investment properties despite the declining markets, we need to break the purchasers, the buyers, down to three main categories. And you have to understand, I am not speaking in theory. I am working with buyers as a real estate agent, and most of the buyers looking in downtown area fit one of these three categories. Category / buyer profile number one is your pure speculators / investors who are okay taking a loss in terms of cash flow in the short term. Category / buyer profile two are your investors who are buying with a significant down payment. Thus, as a result, the declining rental rates are not going to be that obstructive in terms of them turning out a positive cash flow on a monthly basis. And lastly, buyer profile / category number three, you have your short-term end users, long-term investors. So let's break these down, for instance. Number one, your pure investor speculators who are okay taking a loss in the short term. These buyers are rushing into the downtown Toronto market in terms of buying investment properties despite the falling rental rates because they have determined, according to their finances, they can afford taking a loss on the cash flow or breaking barely even until the pandemic is for the most part over and migration resumes again and rental demand downtown increases. They're forecasting this along with other professionals, and I am as well, between 8 months from now to 12 months from now. Now, this is not to say that in that time period, rental rates are gonna spike back up to the hottest of markets. No, they're not gonna go back to where they were in 2019, 2018. They are, however, gonna climb back to moderate rates. Moderate in terms of the market. It's no longer be a tenant's market as it is now, and it's not going to be a landlord's market as it has been for the majority of Toronto real estate history and in recent memory. As a result, the decline in rental rates does not pose a substantial roadblock to these individuals and their investments because they have deemed that they're okay taking 6 to 8 months of a loss. Now, this is the riskiest of portfolios because you are saying to yourself, I am going to take a loss. So as a result, we can say about these people, they are looking to buy low, take a small loss on the rental income for 6 to 8 months. And then once the market improves, start breaking even and making a small profit on the rental income. But really majorly, they're looking to cash in on a buy low investment for condos where it appreciates 2 to 3 years from now. Then you have your second profile, the second buyer profile, the investors who are looking to buy low with a large down payment. These individuals will not take a loss on the rental income. They will not be in cash flow negative because when I say large down payment, I don't even mean 30%. I mean minimum 45 to 60%. These people are gonna buy in a market where the condo rates are down, the condo prices are down, the condo market at large is down because they see a good opportunity to buy low. And the decline of the rental market does not irk them that much because yes, they can't make as much of a profit they could have made last year, but they're still making a profit on the rental income even when the rents are down because they're buying with a huge sum of down payment. Lastly, you have your end users in the short term, yet investors in the long term. Now, I work with all kinds of different buyers. I work with buyers who are very emotional about property. I work with buyers who are very financially minded about properties. And I work with buyers in the middle, and most people fall in the middle. Well, these end users in the short term, investors in the long term, reside on the spectrum of buyers a little more so towards the financially minded buyers, where obviously they want to get a unit for a good price and they care if they like the unit, but what they most care about is how much they can sell it down the line, or in some cases how much they can rent it down the line. So yes, even though rental rates have dropped, these individuals don't really care about that because they're looking to live in the property. They're buying low at this moment for about a year to 2 years, and then they're looking to rent it or sell it down the line. So in all three cases, the decline of the rental market does not pose that much of a deterrent for people to buy low right now in the condo market. Now, there is less of the first profile in comparison to the other two, but nonetheless, all three of these buyer types in conjunction with another are really creating a floor right now. And naturally, outside of real estate as well, in stocks or any other trading of commodities or equities, when something falls, the price falls and the sellers overreact and kind of offload the property and sell, market kind of overcorrects in that sense, wherein prudent investors see it as an opportunity to jump in. And when they jump in, they actually kind of create a floor on that commodity wherein, yes, that commodity is down, but it's not going to go below that floor because investors are rushing in and kind of pushing the prices back up in a sense. As always, this is Sam from SaberiSixRealEstate, Remax Realtron Realty Inc. Contact information, description box. Subscribe, like, and comment, or don't. But most importantly, stay safe. Thank you very much.